right, welcome back to Robinhood Stock Market Watch List Group. Today is Sunday, July 31st. My name is Carlos. I'm the creator and administrator of our stock market group. And today, like every Sunday, we usually get together, have a little meeting, kind of go over some current activity as well as looking ahead of what's scheduled to happen. So that way we know what's going to happen before it happens. That is so critical to know, especially in a volatile market. And so one of the important things as we begin to do our due diligence is to look at what is going to affect the stock market the most and then work our way down. And other than world news that can play a big part, but usually and consistently it's always economic reports. And so I remember before I started getting into economic reports, we get these we notice the market move very aggressively in either direction, but don't know why. But then all of a sudden we started getting these news alerts with our news applications of certain economic results. And one of our rules is to always follow the money. And so we always got to know, what's moving things and why. But over time, we've learned that that these have scheduled dates, and so we just got to know what days are scheduled for certain things. And so, and I've looked at many different websites, and the investing.com website seemed to be the most user-friendly once you kind of get dialed in a little bit and get familiar with the website. And it's a mobile application you can download to your smartphone. The user interface is a little different, but it's important as we do our due diligence throughout the weekend or the week that we start off on the economic calendar. So let's go ahead and we'll click on that. If you're on the mobile application, it should be a little calendar on the bottom middle area of the app. And you'll see several different calendars between your economic calendar, holiday calendar, earnings calendar, and so on. But in this case, we want the economic calendar. It's already going to load a bunch of stuff, but we need to clear everything by clicking the filters tab, or it'll look like a funnel on the mobile application. We need to clear everything because there's only two things that we need to see. We need to put a check mark under the United States, and then we need to put a check mark under 3 stars because we're telling the system to pull everything that'll have the biggest impact on the United States stock market. Once we click apply, it'll then refresh, and then we want to click on this week. That way we can look ahead to see what this week is going to look like. This is very, very important. That way we can always plan our trades and trade our plan. Very, very important. This is one of our pro rules. And so Monday, which is tomorrow, August 1st, we have the ISM Manufacturing PMI report for the month of July. Now, there are weekly reports, there are monthly reports, there are quarterly reports, and there's yearly reports. The more rare the report is, the more of an impact it'll have that current day and time. And so if it's a weekly report, usually you'll see these where there's no month or quarterly or anything after that. But if it's a monthly, you'll definitely see what month that it's for, or quarter, or whatever. And so we have, and normally we don't have that many any economic reports on a Monday or Friday. Most of the time it's usually dialed into a Tuesday, a Wednesday, and a Thursday. Those are usually one of the best days to day trade and to swing trade. And so, but Monday, and this week is filled with a lot of activity, economic reports, earnings, and whatnot. So it's just very important that we understand what's going to happen before it's going to happen, so that way we know, how to plan things. And so, if you're not sure what this or any of these reports are, feel free to click on it. A new tab will appear, and with a very small paragraph letting you know what it is and how it can affect the the market. And so the ISM is the Institute of the Supply Management Manufacturing Purchasing Managers Index, which is the PMI. Report on businesses based on data compiled from monthly replies to questions asked of purchasing and supply executives in over 400 industrial companies. For each of the indicators measured, like new orders or backlogs of orders, new export orders, imports, productions, supply deliveries, inventories, customers' inventories, employment, and prices. This report shows the percentage reporting each response, the net difference between the number of responses in the positive economic direction and the negative economic direction, and the diffusion index. Responses are raw data and are never changed. The diffusion index includes the percentage of positive responses plus 1/2 of those responding the same considered positive. The resulting single index number is the seasonal adjusted to allow the effects of the repetitive intra-year variations resulting primarily from the normal differences in weather conditions. Various institutional arrangements and differences attributable to non-movable holidays. All seasonal adjustment factors are supplied by the United States Department of Commerce and are subject annually to relatively minor changes when conditions warrant them. But it definitely shows, some information here, but on the bottom shows how it can affect the stock market. So obviously a higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or stock market. And so going back, we see a time. Now, when we're looking at this time on the website, it's going to automatically default to Eastern time. So based on your time zone, we have to make sure we're adjusting, the right time with your time zone. But if you're looking at it at your mobile application, it'll automatically default to your time in your time zone. So it's very important that you know your pre-market or what time the stock market will open in your time zone, as well as what time it'll close in your time zone. So that way we can kind of do a little calculation and make sure that we're timing everything correctly. Because this is showing that this economic report is scheduled to be released at 10 a.m. Eastern time, which means it will be released 30 minutes after the stock market opens. And usually the first hour and the last hour of the day, stock market day, is the most volatile time. And so what we're seeing is that 30 minutes after the stock market opens, when usually when we start to maybe see the prices and whatnot, the volatility start to kind of calm down, all of a sudden this comes out and rebuilds a lot more momentum. And so, but by trying to figure out, is it going to be bearish momentum or is it going to be bullish momentum? So let's take a look. So the previous report was 53, which would have been for the month of June, but the forecast for the month of July is lower. So anytime you see the forecast lower than the previous, expect bearish characteristics. If the forecast is going to be higher than the previous, expect bullish characteristics. And usually, even if the actual report came back higher than the forecast, sometimes we still see the market react to what was originally forecast. And so it's usually kind of the flow you want to follow, because that's usually where the majority of the characters, it's almost like a clue. It's trying to tell you, but it's not exactly telling you, and so it's a really, really neat trick. And if you follow that, you'll see that it works probably 80 or 90% of the time. And so, in the last couple trading days, like Thursday, Friday, were pretty, very bullish days. We are expecting some kind of, some kind of bearish characteristics at some point in time. They kind of, the cool things down a little bit before. Basically, stocks need to kind of come down a little bit before they can keep going up. And so Monday could be that day. And so just to be determined, because a lot of times we get a lot of news throughout the weekend, international news. There's been a little bit of issues with Russia and China, like always, and so it just depends on how that can affect the market come Monday. But again, I'm always reminding you guys, we are in a bull season. It may not look like a bull market just yet, but regardless, the bull season is the summer season. It is the third quarter. And so normally we see a very strong bullish characteristics during this time up until usually about mid-March, right before the holidays. We have a Thanksgiving, and then a lot of other Christmas. But ultimately, not only do we have a lot of holidays towards the fourth quarter, and it's also before the end of the year, but December is when we'll have another triple witching day, which we'll always get into that later, but that just really provides a massive amount of bearish characteristics, and usually finalizes our bull season and begins our bear season. And so but right now we're in a bull season. That's what matters. And so we're just going to see a tremendous amount of characteristics on that. And so Tuesday, August 2nd, we have this economic report, the JOLTS job openings report for the month of June, which is also scheduled to be released 30 minutes after the stock market opens. However, we have a forecast which is again lower than the previous. And so where the previous was, and this would have been for April, would have been reported at 11.25, where the forecast is now 11. And so this could also provide more bearish characteristics for Tuesday. And so, however, we'll get into earnings here in just a little bit. Obviously, with a lot of the big high market cap stocks can also have a big role in bullish or bearish characteristics for these days. But I have the top 10 analysis for the earnings report this week that we'll get into right after this. And so Wednesday, August 3rd, we have two economic reports. One is scheduled to be released 30 minutes after the stock market opens, while the other one is 1 hour after the stock market opens. So just building a lot more, momentum Wednesday. And Wednesdays are usually a pretty phenomenal, volatile day for day traders, and so this is going to be our prime day for this week. And so we have the ISM non-manufacturing PMI report for the month of July. And so the previous report is also 55.3, where the forecast is also lower at 53.5. So just more bearish characteristics. But like I said, our bull season can easily outweigh this, as well as with the help from some positive earnings coming up. And so crude oil inventories is the economic report scheduled to be released 1 hour after the stock market opens. Wish we had some ones in pre-market other than the next 2 days, but that's okay. Like I said, it's very important that we know what's going to happen before it happens. And you'll notice when these reports are released, because now you know what to expect before it happens, and all of a sudden now we'll start getting these news alerts, and we already know the news. And so and you'll get these news alerts maybe well after 1 hour after this report is been released. And by that time, if for people that aren't following these economic reports are behind. And so now they're getting these news alerts 30 minutes or an hour after this information's been released, and the market has already and sometimes it reacts before the actual report is released, because sometimes the market just knows, or it seems like it knows what it's going to do. and but it always seems to be based off of the forecast, whether it's actually better than forecast. But it's very interesting. But we just gotta know this stuff inside and out. But every once in a while, we'll see there's no forecast, like the crude oil inventory levels. This is a weekly report. Now, the previous report was significantly down. Now, there are two reports where the numbers need to be down. The lower, the bullish. And those are the crude oil inventory report and the unemployment report, which is our initial jobless claims. The lower these numbers, the better. And because for crude oil inventories, that just means people are buying gas, oil, they're driving, they're going on trips or doing whatever. Maybe it's good for business. They're spending money, and that's good for the economy. Unemployment, people going to work, making money, shopping, spending, or paying taxes and stuff. And so lately, that's been going up quite a bit. But with the crude oil inventory levels, how it significantly dropped last week, we should anticipate that it should surge this week, because what we've been seeing with the high gas prices, we're seeing most Americans get paid every 2 weeks. And so they're when they get paid, they're going to their local inexpensive gas station, and they're filling up, trying to make it last for 2 weeks. And so, but what we're seeing is for that week, everybody's doing that almost at the same time, and it's drastically consuming fuel. But then the next following week, nobody's really filling up. And so that means we're getting kind of like this yo-yo effect, where it surges, then it plunges, then it surges, and then it plunges. So that means if last week's report was down, which was positive, bullish, that means that now this should surge upwards, which would be bearish. So we basically have, we can kind of forecast it by ourselves. We don't need them to do it, because we see this algorithm. And so these two reports are basically going to be bearish. So far out of all these reports, we're seeing bearish characteristics for Monday, Tuesday, and Wednesday. Now, come Thursday, the unemployment report, or the initial jobless claims, is scheduled to be released 1 hour before the stock market opens. And so lately, the unemployment report has been trickling up, as a lot of companies have been letting go a lot of their staff. That way companies can maintain and being profitable. And so but last week it was down a little bit, but the forecast for this week is also showing that it's supposed to be lower. In this case, like I said, the lower, the more bullish, the better. And so this is saying that we should expect bullish characteristics for Thursday. So we have bearish, 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 and then bullish for Thursday. And so this is good. This is highly valuable information. This is good to know. And then Friday, August 5th, we have two economic reports that are also scheduled to be released 1 hour before the stock market opens. And when we have these economic reports that are scheduled to happen before the stock market opens, it creates extra volatility during pre-market, which is great. And it's also great for anybody that's into stock options that are maybe straddling, because the more volatility, the better, especially during pre-market. If we can straddle maybe the day before, a lot of times we can buy calls and puts 5 minutes before close the previous day, and we can sell them the next day, whether the stock market surges or plunges. And we'll get into straddling more here in a bit for those that aren't yet really familiar with options. And so, but this is great information. Non-payroll or non-farm payrolls for the month of July looks like this number is also going to be down, where the previous month was 372. I mean, it was quite a bit. We were very surprised, very impressed, but it definitely seems like we're expecting it to be a little bit lower. Where the unemployment rate for the month of July looks like it's anticipated to be right about the same. So, but I think overall, with the lower jobs report, we could definitely experience some bearish characteristics. So going into earnings, now in our Facebook group here, I always post a lot of information, and it's all saved under our featured area. So this is like my bookmarks. Anything I post, we can always find it under the featured area. So that way we can easily find it. And so every Saturday I'll post the next coming week's earnings report. So it's right here, so that way we have our Monday, Tuesday, Wednesday, Thursday, and Friday before open and after close. And so there's a lot of great information in here. However, I do receive the top 10 analysis from Earnings Whisper and share it with you guys. That way we can kind of analyze it together. But there's still, like in this time, there's a lot of great stocks here that go beyond just your top 10, like Lucid, and I think Rivian's next week. And so there's just a lot of great stuff here. But let's analyze the top 10 here, which is basically the number one is going to be our AMD. Then we have PayPal. We have our Devon Energy. The On Semi for the semiconductors, Occidental Petroleum, and oil has been very, very profitable for these companies. And so we're going to dive into that right now. Uber is next, and we have Sophie, Caterpillar, Alibaba. AMC for some reason made it on this list, but I didn't receive the analysis on that. In fact, it was actually switched to something else. I can't remember what it was, like John Deere or something. BP is right here, so I think that was it. So BP is confirmed to release their earnings on Tuesday before the stock market opens. And we can kind of see that right in here for the time. And I kind of point out some very, very important parts to this, where the company's earnings release has a 79% expecting an earnings beat. Now, when we're looking at this stuff regularly, usually average is around 65%. Could be lower, could be higher, but this is definitely over average. I mean, we're almost at 80% with this. I mean, that is, when you're converting that into odds, that's like 4 out of 5 odds that this is going to beat their earnings. And option traders are pricing in right around a 5.5% price movement in either direction, where normally in the past it usually averaged around 4%. And so, but the pictures always say 1,000 words, so if you're not familiar with what the company is, a lot of times we can get some clues from the image. And like I said, the oil companies have been very, very profitable lately. Alibaba is confirmed to release their earnings on Thursday morning before the stock market opens. Company's earnings release has a 59% expecting an earnings beat. Now, I think they were going through a lot of lockdowns, a lot of issues and stuff going on last quarter. So this will be very interesting, but 59% definitely below average. However, option traders are pricing in around 10% price movement in either direction, which is very, very volatile, where the stock is usually averaged around 6% price movement in either direction. Now, we have Caterpillar right here, which is confirmed to release their earnings on Tuesday morning, on August 2nd. The company's earnings release has around a 67% expecting an earnings beat, which again is right around average. However, option traders are pricing in around a 5% price movement, when normally it's half of that. Sophie is scheduled to release their earnings also on Tuesday. This is after the market closes, so that'd be Tuesday evening. The company's earnings release has around a 68% expecting an earnings beat, so that's just right around average as well. However, looks like we're expecting a lot of volatility from this one. Option traders are pricing in almost 15% That is phenomenal. And this is as someone that does straddling. So if you're not into stock options, we have calls and we have puts. A call is to bet a stock goes up. A put is to bet against the stock, betting the stock goes down. So a straddle is when you do both. A lot of investors and traders don't really realize you can do that. It's almost like we feel like we can only pick one direction, like a one-way road. We can only pick up or down. No, we don't. We don't just have to do that. We can pick both directions at the same time. We can bet a stock goes up and down. And the benefit to that is that you can only lose what you have in one hand, but your gains in the other hand are potentially unlimited. So for worst case scenario, like let's say for this, we get this, it moves 15%, and you're going to lose you're going to lose basically 100% in one hand, but your gains in the other hand could be 200%, 300%, 500%. We've even seen thousands of percents. And that gain can wash out your loss in on the other hand and put you ahead. And so there are some cases where, especially if you're doing earnings or especially if you're going through a split, where if something doesn't work out and it's hovering right around 0%, and there could be something what's called an IV crush, which means implied volatility crush. It definitely happens. And that's why if we're doing stock options on earnings, we want to consider the fact that something might not work out, and we got to consider it as a lottery play. A lottery play, just like a lottery ticket. Like we just had the Powerball or Mega Millions or whatever, that was more like a Mega Billions, was $1 billion. You know, we had one person in Illinois that won it, but I watched people contribute hundreds and thousands of dollars trying to get this ticket, and it didn't work out for them. So a lottery play is you put money into something, and in case if it doesn't work out, it's money you're not going to miss. But this is, your odds of hitting pretty big on something like this are much greater than the lottery anyways. But we still have to factor in that, not to go heavy on this. When we're doing stock options, there are certain stocks that we want to go heavy regularly, which we'll get into more here in just a little bit as we look into current activity. But for now, as we go through these earnings, that we want to look for these high movements, these predictable movements, and so this is definitely going to be on our watch list for Tuesday right before close. So, like for example, my strategy, I'm going to straddle. I'm going to get into this guy 5 minutes before close. That way, I'm not worried about the middle of the day, the volatility, or a lot of times these stocks may be hovering around 0%, not really doing anything because it's waiting for the earnings report. And so if it's going to hover around 0% or not really move throughout the day, I'm not going to risk the time decay or the depreciation. And that's why I'm just going to get in 5 minutes before close. I'm going to buy both calls and puts, an even amount of contracts, the same. And my rule is the same strike price, or the strike price has always got to be the same as the share price, and that way it's not any higher or lower, but it's got to be within the vicinity, maybe within 1-2% or whatever. But usually I always pick the share price as the strike price. And so and with the soonest expiration for the expiration date for the most volatility, because the more volatility, the more chances that you'll gain more. I mean, you'll lose more on one hand, but you'll gain a lot more in the other hand, and that's what we're looking for. And so Sophie definitely is going to be on our list. Next is Uber. Uber is right here, and then but lately, man, their rates have gone up. So Uber is scheduled to release their earnings report Tuesday morning before the stock market opens. The company's earnings release has a 50% expecting an earnings beat, which is terrible. That's, that is, like, again, that's way below average. However, option traders are pricing in around a 12% price movement in either direction, where before they usually average around 5% price movement in either direction. But we're going to expect some pretty gnarly volatility with this one this week. Next one is Oxy. As you can see, with the pictures, they're obviously in the oil business, and the oil business has been very inflated as well, and inflation can be very profitable. And so Oxy here is scheduled to release their earnings on Tuesday after the stock market closes. The company's earning release has an 89% expecting an earnings beat. That's almost 90%. Those odds are like 9 out of 10 odds, this thing is going to beat its earnings. That's very, very rare to see. It's very unusual. And it's just, it's like almost a no-brainer. But option traders are pricing in around 6 to almost a 7% price movement in either direction, where normally it has moved around 2.5% in recent quarters. Next one is on Semi. As you can see with the image, that they're a semiconductor company, so they build microchips, which hasn't always been in the favor of these microchip companies, because they are also at the mercy of collecting a lot of the rare earth materials and stuff. And it seems though in the last couple of years, whether you've been following certain industries, that a lot of the shortages that have been kind of like intentional, where they've all been kind of forced, trying to enforce a low supply, high demand, increasing values or inflation intentionally. And so in the past, we've seen the semiconductor companies not do very well because they've been kind of forced not to receive a lot of materials to manufacture microchips. So however, it seems like that's kind of changing now. They've received more access to materials so they can manufacture these microchips. And so we could easily see a better profitability and better numbers with these companies, not just on Semi, but also the Taiwan Semiconductor Company, AMD and Nvidia and so on. And so but ON is scheduled to release their earnings report Monday morning before the stock market opens. That's tomorrow morning. However, this will most likely affect other semiconductor companies, like the other ones that we just mentioned. However, the company's earnings release has a 69% expecting an earnings beat, which is not bad. It's a little more than average, which is good. So more than likely, this thing will beat their earnings. And option traders are pricing in around a 9% price movement in either direction. And it's been pretty volatile before in the past, right around 8%. So it's expected to be a little more volatile this week. Next one is the Devon Energy Corporation, which is also confirmed to release their earnings report, but on Monday after the stock market closes. The company's earnings release has a 96% expecting an earnings beat. I don't know if I've ever seen it that high before. I mean, this is like a no-brainer. I mean, 96% expecting an earnings beat. Oh, my goodness. However, option traders are pricing in right around a 7% price movement in either direction. Most likely, it's 96% chance it's going to be in the upwards direction, where this has usually moved right around 5% in recent quarters. Next one is PayPal. PayPal is scheduled to release their earnings report Tuesday after the stock market closes. The company's earnings release has around a 60% expecting an earnings beat, which is just shy of below average. However, option traders are pricing in around 10 to 11% price movement in either direction, where before in the recent quarters it's been doing the same thing. So this is another volatile one, and probably not bad to straddle as well. And so next one is the AMD. I think this is the last one, last but not least. So AMD is definitely confirmed to release their earnings Tuesday after the stock market closes. So this is huge. This is the biggest one for the week. The company's earnings release has a 76% expecting an earnings beat, which is definitely below average. So semiconductors, we could see, like I said, if the economic reports come back very bearish, these reports could really help add more bullish characteristics to the stock market, because these are very high market capital companies, and so these could really provide, well, either more or a lot more bullish characteristics, or we could see just a mix of signals, bearish and bullish characteristics throughout Monday, Tuesday, and whatnot. But option traders are pricing in around 7, almost an 8% price movement with AMD, where normally it has moved around 5% in recent years. And 8% for AMD is not bad, and I probably still straddle with this one as well. And so after we do our due diligence, it's always good to check back with investing.com, because every Sunday they'll post the top 5 things, the top really important things to watch this week. And so, but a lot of it is stuff now that we already know, because a lot of the stuff that we've already kind of gone through, like the number one was the non-farm payrolls, which we've kind of went over. It just kind of explains a little bit more, stuff that we've already talked about. Now it looks like there could be some Fed speakers. We didn't really see any of these in the major economic reports, because maybe it's more or less in the minor economic reports, under the 2 stars. Which you can, if you go back to the economic reports, you can look at the 2-star ones. It's just not going to provide that big of an impact to the stock market compared to the 3-star ones. And so, where investors will get a chance to hear from several Fed officials this week, and their comments will be watched for indications that a smaller rate hike may be on the cards in September, after recent data pointing to economic weakness. So this may mean that we may not have any interest rate hikes for August. So we can kind of get a break from all that stuff, is what I'm kind of seeing here, because that's created a lot of volatility. And lately, in between June and July, I mean, June we did a 3/4 rate interest rate hike, and then all of a sudden we just did another a 3/4% interest rate hike. That is a 1.5% interest rate hike in 30 days. I mean, that's huge. And so hopefully, there's nothing coming up in August, so that way it's full on bull mode. So given mounting fears over the prospect of recession, market watchers will also be paying particular attention to the institution of supply management, or the manufacturing PMI on Monday, which is the reports that we were talking about, and the ISM services, the PMI, on Wednesday, which are both expected to confirm that the economy is slowing. The United States has also released the data on the JOLTS job openings on Tuesday. While job openings have been easing in recent months, they're expected to remain at elevated levels. And then number 3 is the earnings deluge, which we've talked a lot about. However, there are investing.com was to point out a couple other very important stocks like Activision and Blizzard, major video game company that I believe was just purchased by Microsoft not that long ago. So they're owned by Microsoft, and Microsoft. I've been playing around with that whole the Game Pass thing and the cloud gaming. I got it set up on my computer. I got it set up on my Surface Pro. That is pretty neat. I mean, your Surface Pro is like your handheld Xbox. And the cloud gaming is phenomenal. You don't have to download and install anything. You just play it instantly right then and there. I mean, it's amazing. And I've always wondered, why they don't have a little portable gaming thing. But I mean, that is just phenomenal what they've done there. Absolutely. Caterpillar, Uber, Eli Lilly, a couple other major names and stuff here as well, here in the bottom. like Starbucks, Airbnb. Some of you guys have talked about that. What other ones here? Booking Holdings, eBay. I mean, there's just a lot going on. AMC, there's always going to be questions about AMC. AMC is just one of those manipulated stocks. I just usually, I avoid, I highly recommend avoiding, because it's manipulated. Back in the whole GameStop, surging days, that was the primary stock to surge, but also to retaliate against the hedge fund companies and all kinds of stuff. And there was a bunch of little wannabe stocks, and AMC was kind of second place at that. And so it's just definitely one to kind of avoid, because it's been slowly kind of, AMC was a penny stock, and it's slowly getting back down there. And so, but again, there's been more movies coming out in movie theaters, and so there's been more revenue that's been generated, with what movies that have been out, and a lot of the movies that you've seen, whether it be like Top Gun or Jurassic Park, we're hearing things, we haven't seen this much revenue or people going to the movies since before the pandemic or whatever. And so this could easily be great news for AMC, and AMC, this could be a huge advantage for them. So but we just got to make sure that their value kind of meets all that kind of stuff. And so let me see. We'll go over a couple other things here. Somebody trying to add. Hold on here, guys. I apologize. I need to try to reset the. Here, clear.
Oh, you're doing a good job.
Somebody's drawing. Yeah, that's fine. Anytime you guys have any questions or want to bring anything to the table, feel free to unmute. You can chat in the chat room, voice chat, whatever. I don't have to keep talking, but for number 4 is the stocks rally. United States stocks added to their recent rally on Friday, with all 3 major indexes gaining for the month and for the week. And so, but there's definitely just a lot more stock rallying for this week. And then number 5, we have Bank of England to accelerate their rate hikes, which will partially affect the United States. But with all the stuff that's going on, this is kind of on the bottom of the list. And so let's take a look at the current stock options activity. And a lot of times I'll get this information from the bar chart website. We can go to the menus area, click on options. If you're on the mobile device, it may be a little 3-line hamburger menu icon. Just click on that and then click on options. The first one we want to look at is the most active options, because what it's going to do, it's going to summarize the whole entire system on one page, sorted out by options volume. And so, and this is last Friday's information right at closing. So it's nice that, but when we're looking at this, it's important that we look at this regularly on a daily basis. It's important that we look at it throughout the day, because it does update like almost every 15 minutes, especially these prices, percentage changes every second. And so it's kind of like it's forming your own watch list, but normally we'll see Apple, Tesla, and Amazon are always on the top. They dominate this list because
the market.
They're the most favorable stock options to day trade and to swing trade by professional traders and investors. They hold a lot of value. They maintain the least amount of time depreciation than any other stock option. But however, Apple usually dominates that by far, with the least amount of time depreciation. And with what small movement that it makes in the options world, it's huge. Like for example, even though Apple only moved around 3%, I use another website from NASDAQ.com to pull in the most active stock options, with their data. But Apple had earning releases or earning release prior, and so it was affected a little bit by the implied volatility crash. And so that's why it's very important that you're very careful when playing options with earnings. You just got to be a lot more certain that it's going to be very volatile, or it's going to be in your favor. You're going to know which direction that it's going to go. But since Amazon had moved 10%, let's take a look at that, because that was pretty volatile. And so with Amazon here, we have the most active calls on the top, most active puts on the bottom. Now Amazon was up 10%, which you would have lost everything on the put, versus the calls. Now some of these were way out of the money and had expired, but these other ones that were within the money, whether they had expired or not, we can see that we have around a 200 to a 300% gain in one day. And so by straddling, these gains would have outwashed your losses and put you ahead by quite a bit, just for one day. And so but even if we're not doing earnings, it's still really important to straddle regularly every day, because especially if you don't have $25,000 in your account and have unlimited day trades, usually anybody with less than 25, we're limited to 3 day trades per 5-day trading period, or 1 week. And so, but if we buy our straddling, our calls and puts 5 minutes before close, by the time it does close, usually we're at 0% on both, which is good. Going into the next day, now we can sell at different times to maximize our gains and minimize our losses. And a lot of people are like, well, how do I do that? And so I've created some images that absolutely help. And the reason it's important to utilize what's called moving averages is because moving averages helps provide us our buying and selling signals. Without these, we would be trading blindly. We're throwing money at something hoping that it sticks. Where these little candlesticks, that's the price line. The white line is the moving average line. This is very important, and it's important if you're not using something that has and supports moving averages, it's time that you do. And able to get different results, we have to try something different. Otherwise, if we do the same thing, we're just going to get the same results. So it's time to do something different if you're not already using moving averages. I recommend, and I use a free application you can download from webull.com. You can download a desktop application. You don't even have to sign up for it. Just download it, start using it, configuring it. Same thing with your app store on your mobile device. You can download the Webull. You can start using it without even signing up for it, and start configuring your moving averages. That way you can now receive your buying and selling signals. And so when the stock price goes down and cuts through the moving average, that's time to sell your calls, because if the price line starts going down, you're now going to sacrifice your gains. So when we're straddling, depends on the morning. If the morning opens up and all of a sudden the price drops, that's when you want to sell your call, hold your put, because this one here is letting us know when to buy and to sell calls, where the second image I have here is when to buy and sell your puts. So as the price goes down, we want to buy puts, or if the price goes down, like I said with the other page, you want to sell your puts or sell your calls, hold your puts until then the price reaches at this point, then you sell your puts, and then or you can buy calls. And so it's just very, very important to know these signals and what you need to do. It's almost like it's communicating with you. It's like a very simple language. It's just you have to know this language and how it's communicating with you, because it's like your assistant. It's telling you when to buy and when to sell. These are ultimate, questions, and it's providing you the answers. It's just a matter of learning about it and how to configure it and everything. But going back to the most active stock options, out of this amount of volume, we have a percentage ratio. So for example, Amazon, out of this tremendous amount of options volume, which is normally never this high, we have around 60% call percentage, which normally lately we've seen this around 50%. It's always been about 50-50, but not only are people, and again, this is part of that whole following the money thing that we were talking about earlier. So we have over 60% of people that have invested into these stock options are betting that the stock is going to keep going up the current trading day as well as the next trading day or within the next morning. And so a lot of times we can find maybe even higher percentages on one side over the other. Like Ford Motor Company, they were up almost 5%, but out of this volume, 73% are still betting this stock's going to keep going up. And so, and it probably will. And so, because most likely Ford Motor Company is still considered undervalued. Before Russia invaded Ukraine, Ford Motor Company had touched $25. That was extremely impressive. I was blown away. And but if they can do it, they can easily do it again, because Ford Motor Company has a lot more going on. They're building more factories. There's a lot of stuff in the works. But then we have NVIDIA right here, which we've seen a lot, with the semiconductors and everything, with that kind of activity. I mean, there's just a tremendous amount of valuable information right here. But it's also important as you're looking at this regularly every day. My goodness, look at Roku down 23%. But look at that, almost 61% are betting on puts, betting against the stock. However, when we're looking at this stuff regularly, we can see what stocks are normally on here, because they're normally traded by day traders. They're favorable stocks, and when you're day trading a particular stock, you're learning its personality. How it moves, and what makes it sad, what makes it happy, blah blah blah. And so that way you're not always trying to find something new. The pro traders trade the same stock over and over and over again. And so but when we're looking at this stuff regularly, we know what's normally on here, but we also know what's not normally on here. But when we see a stock option that's not normally on here, we can consider that like unusual activity, because it's on here for some good reason, because it's not normally on here. And so but normally with these, what I'm seeing here, these, a lot of these I think are normally on here, except for, charge point or this PBR, petro thing. But it's on the bottom of the list. We're starting to see, more oil as we're looking at, earnings and stuff. We're just seeing a lot more activity on here. So I don't really see anything unusual on here, because these are all just pretty big market cap stocks. But there's another area to the options menu other than the most active options. If we click on the option volume leaders, this will now provide us the most active individual calls and puts. But when we're looking at this on whether it be a Friday or during the weekend, some of these are going to be expired, so we need to avoid those. And how we can look to see if these are expired either by looking at the expiration dates or the DTE, which is the number of days until the option expires. If we see 0, then we just need to block it out. It's no longer valid because it's expired. So that means that the next most current and active one is this guy. So this is the charge point. So charge point, or CHPT, which is currently at $15.11. We see a $15 call and a $16 call strike price that expires this Friday or approximately 7 days. And look at this. So we have a very large amount of and unusual volume activity, right around 97,000 on both the $15 and the $16 call strike price. However, one has 92,000 in open interest. The other one had hardly nothing, and now all of a sudden it's got a lot of interest because the stock price has passed the $15 strike price. So most likely, for example, if you're new to stock options, then you're new to what's open interest. Open interest is the total number of open option contracts that have been traded but not yet liquidated via offsetting trades, meaning not sold yet. However, the open interest is the prior information, or the prior day's information. So for example, this is all Friday's information from right before close. However, open interest is the previous day or the previous trading, days. It's an accumulation type of thing. And so let's say for this guy right here, charge point, the previous, before Friday, the total open interest was 92,000. Now all of a sudden we have 97,000 in volume. This could be selling activity, because volume is buying, the current day's buying and selling activity. So we don't always know exactly if it's buying or selling activity unless we're looking at different resources. However, by looking at this could possibly be, even though it's slightly over 97,000 and slightly over the 92, there's still a lot of buying activity in here, but I still feel the majority of it's probably selling activity, because they're selling the $15 strike price and buying the $16 strike price, because there may be more of a potential, more gains with that, rather than already being in what's called in the money. And so with the 6,000 open interest, that means that previously it had no interest, and now 97,000. This is like pure buying activity, because it's far beyond what the previous open interest was. It's got a lot more interest now. And these two numbers going into Monday, going into tomorrow, will then kind of combine itself. They'll merge together. So now tomorrow, this strike price open interest will be probably around that 90,000 or maybe even 100,000. And so again, this is just very, very valuable information. It's good to know, because the more you learn, the more you're going to earn. The stock market has potential to provide you guys an unlimited income. I mean, it is amazing to be able to make $10,000 a day. You'll no longer need to look at price tags ever again. And you'll be able to pay it forward, help your friends, your family, your neighbors. I mean, you'll be able to do amazing things. So Amazon is the next one down the list. Amazon is currently just doing amazing right now. Almost $135. But however, we have going into this week, we have a $140 call strike price that expires this Friday, approximately 7 days, or this is Monday, but Friday. So, but really it's a little less. But overall, we have a 26,000 open interest, and we got a lot more than that in the volume. So this is showing a lot of more interest, a lot more buying activity, as investors are betting Amazon's going to keep going up. So again, we follow the money. That's our rule. Remember? So the next one, so this is expired. Next one is Apple. Which Apple right now is right around $162.51. We have a $165 call strike price that also expires this Friday. Our open interest was pretty low there at first, just under 13,000, but we got a lot more interest now with 82,000 in volume. So guys, these are on our watch list. These are doing very, very well, because again, we follow the money by seeing also where people are investing their money. I mean, we're talking thousands or millions of dollars going into these. And so if they're doing it, we got to follow it. We got to know what's going on, where people are going with this. Everything else looks like it's zero or expired. So these are kind of the top so far on our list. But to be able to pull more, to show all, the barchart.com would want you to obviously pay for it to get more information. But for, like open interest, that's another good one. Maybe we want to look at what people are holding in the stock options world. That can provide a lot of great valuable information. Now when I click on open interest, it's going to sort it out by what is currently on the list. But we want to do, when we click on the open interest, is we want to click on the refresh button on the browser. Now that'll refresh the entire system by the open interest. And so with that, now we can see a huge amount of open interest with these stock options that are not expired. And so the first one is the CCL, which is what the Carnival Cruise we have, which are currently at $9.06, but we have a $7.50 put strike price that expires this September, or approximately 49 days. We have a tremendous amount of open interest, which again means the total number of open option contracts that have not been traded but not, or that have been traded but not yet liquidated via offsetting, meaning where people bought it and they're holding on to it, they've not sold it yet. So this is either the people are buying more, or maybe they're selling. It just depends on kind of what's going on. But with this amount of people that are holding, most likely, I think they're probably accumulating more. And so Ford Motor Company, and even if you're not into stock options or don't want to be into stock options, this particular information can be very valuable to you, because at least it's providing you information of where people are investing their money, but also where are they betting that the stock price is going to reach. For example, Ford Motor Company is just under $15. We have a call strike price of $20 by sometime before the end of the year, basically January 20th, at most. And so if you were to buy shares, if you haven't bought shares of Ford Motor Company already, and your cost is just under $15, if it reaches $20, that's a 33% gain. And Ford Motor Company, I can't remember if they're still paying dividends or not, but not only would you be holding on to a appreciating asset, but they're going to pay you dividends every 3 months. And so, but if for dividends, you'll have to look into that. I'm not positive that they do, but they used to. And so, but that can be huge benefit, like adding a cherry on top. So next one is American Airlines. American Airlines is currently just under $14, but we have a $12 put strike price betting against the stock, betting that they're still going to keep going down. But then we see a Ford put here, but we have a Ford call here as well. So, but we can definitely see maybe some straddling activity of just in case, type of scenario for insurance play, And so PBR, we have some activity here, not a very far, like Vail's right here, around just under $13.50, but we have a $20 call strike price. That it also expires right before the year is over. We got a lot of open interest on that one. And for Friday, we have probably the most volume out of this page. So it looks like maybe people are maybe even adding or maybe selling, or maybe a little bit of both. We're just gonna have to look into it, but it looks pretty bullish to me. But it's just great information. Just kind of keep going down. Check it regularly, because this information can change. Now, when we're looking at, if we ever see AMC or GameStop, we'll always see these crazy strike prices. I've never seen it hit them for any of them. So I do not recommend, for such a difference between the share price and the strike price. There's going to be a tremendous amount of time depreciation. So just avoid it, because there's something fishy going on there. So not really seeing anything other that kind of catches my eye, other than some pretty interesting puts for Apple, 145 and 115. Man, hopefully these people are selling these, because Apple is, they're going to have a reveal their new iPhone, and I'm hoping that Apple will kind of surprise us with their new electric vehicle. And so, just like how they surprised us with their iPhone X, I'm hoping that they'll surprise us with their electric vehicle the same way they did that. So as we go down the rest of the options menu, there's straddling and strangle. We want to check these as well, because it's very important to not miss any opportunities or unusual activity. So the difference between a straddle and strangle, other than the fact that they essentially are the same concept, where you're betting a stock goes up and down at the same time. However, a straddle is having the same strike price on both, versus a strangle, the prices are different. maybe the call is $5 higher and the put is $5 lower. But it's the same concept, but we still want to look at all 4 pages, whether it be short or long. And what we're looking for is multiple of the same stocks. We want to see the multiple, like for example, we starting from the top, work our way down. So this is Costco. We'll work our way down. There's only one, so we'll ignore it. JP Morgan on the top there, work our way down. That's the only one I can see. Oracle on the third place is nothing else on the bottom. Carnival Cruise, nothing. KO, what's Coca-Cola or something, I can't remember. There's only one of those, but Microsoft. I see 3 right off the bat right here. 1, 2, 3, and nothing else. And there's Apple, 1, Tesla, and so on. Oh, there's 2 Teslas right here, but Microsoft seems to be the dominant one. So going into Monday, because we can look at this information before close, right before close. That way, maybe we're trying to figure out, if there's any unusual straddling activity there. We would have seen maybe that we needed to straddle Microsoft going into Monday. And so that's what this is telling us. And so then we'll go to the second page, the long straddle, and look for the same thing. Look for multiple of the same stock options, starting from the top of the list, work our way down, and then so on. Not seeing any multiple same stocks. So if not, well, there's 2 Apples. I see one there, and there's another one there. And Apple is normally our primary, just like what we were seeing at the most active stock options. Apple, Tesla, and Amazon are the 3 primary day trading and swing trading stocks. These are the ones that we always go heavy on because all the other pro traders are doing the same thing. And so anything else is like not a lottery play, but you just want to go secondary on where you're not heavy, but you're kind of light or medium. The heavy ones, we always go heavy on Apple, Tesla, and Amazon. And so going to the third page, just short strangle, starting from the top, work our way down. So we see a couple Twitters. There's 1, 2, 3. So there's 3 Twitters on the top of the list. So again, going into Monday, looks like we're seeing a lot of unusual straddling activity or strangling activity on that. As you can see, Twitter is right around $41.50. We're seeing some calls at $44 or $45 or $43.50, and some pretty low puts, $39.50 or $38 and so on, and so with different maybe strike prices, but we need to look for a lot of the same type of stuff. But Twitter, that would be a good one to straddle. Tilray, it looks like there's just one there. AMC, there's 3 AMCs right here, but again, I don't recommend doing that one because it's one of the manipulated ones. We got Verizon. Kind of work our way down. Look, I don't really see anything other than Twitter really. Then we're going to the 4th page, long strangle, start from the top, work our way down. Not really seeing any multiple ones other than what we saw with Microsoft and Twitter on the previous ones. I see 2 Google right here, but other than that, that looks like it's about it. Now, the other thing, I always keep forgetting to go over other important things to look for when it comes to volatility with the stock market. And so I do have it pulled up on a tab here, is the Joe Biden's schedule. Now, a good way to just define this is just to Google it. You Google Biden's schedule. And so it's important that we look at this because this also has a huge impact on the stock market. But with Biden's schedule changes, or it doesn't change. I mean, it can change, like we see some things that have been recently canceled, but his schedule, as well as the White House schedule, is almost created almost on a daily basis. They almost don't know what's going to happen, but they do schedule it. Usually you can find it maybe I think right at midnight at Eastern time, or it would be 9 p.m. Pacific time. So we kind of have an advantage if you're on the West Coast. But this is huge because sometimes something may be scheduled to happen that may scare investors or Wall Street, or something may be scheduled to happen that may help the stock market. Especially if they're going to talk about the economy. Like, for example, on Thursday, where the president delivers remarks on the economy and meets with the CEOs to receive an update on the economic conditions across blah blah blah. The economy. He's there to talk about the economy. Now, if it was something different, he's there to talk about COVID or something. You'll know. I mean, your gut feeling will tell you if this may be bullish or bearish. And so, but it can be very predictable once you kind of see this regularly and these are always live. We can always go to YouTube and type in Biden live or White House live, and you'll see a lot of like these news companies like Fox News or Wall Street Journal or whatever that will be ready or maybe they're already ready. Maybe they got their cameras on and they're just waiting. And a lot of times these are scheduled to happen for a specific reason to help manipulate the market. I mean, that's why you see that these press conferences are usually during power hour, because they're scheduled to help manipulate the stock market. So it's really important that we listen in to see what they're saying, because they could be saying something that could scare investors, or it may encourage them to buy things. Like if President Biden starts talking about the economy, and all of a sudden they give company names like Ford Motor Company is building this factory, blah blah blah. Well, all of a sudden, Wall Street hears that, and the news hears that. However, it may not take an instant effect, even though it can. But as the news starts creating these articles, just like the economic reports, it takes time for them to digest this information, to type out an article and to blast it out through all these apps in the news and whatnot. It takes minutes. It could take an hour for them to complete all that. And so during that time, the market is reacting the whole time. In the meantime, you knew what was going to happen before it happened and while it's happening. You guys are going to be stock market ninjas. The more that we do these meetings, the more that you learn and the more that you're going to earn. And that's the goal here. And so, but it's very, very important that you bookmark this website, because it has, it provides a lot of valuable information and resources. Now, it's interesting that now that we see a lot of canceled stuff out of President Joe Biden, it's because he just released that he caught COVID a second time. Can you believe that? After 2 vaccinations and 2 booster shots and caught it, I'm just glad that that I never took any of that stuff. And because our natural immune system can create its own natural antibodies that really help, and that's what's happening with him now. His body's creating all his real antibodies to help fight this, and it could take getting it a couple times, but I'm very surprised that he caught it twice in a month or a couple months time. But so we could see more, we could see complications from him. If we see complications like news and whatnot, if he's not doing well, the market may go bearish. But again, the market doesn't like Biden. It doesn't like, it just doesn't like anytime you see something bad. Usually we see bullish characteristics. But if the market liked the president, like Trump, when Donald Trump announced he tested positive for COVID, the market did not like that. It was very sad. It plunged. I mean, it wanted Donald Trump to be okay, and you can really tell how the market feels about a president. And but it definitely doesn't like Biden. So but normally it should provide bearish characteristics if there is any complications, but we'll have to see kind of what happens. But a lot of times when he's live too, it usually provides bearish characteristics, because again, the market doesn't like him. And so, but as long as he's out and not scheduled to talk, we can maintain our bullish characteristics. So it's like I said, it's very, very important that we know this stuff and what's scheduled to happen before it happens as we go into every day. But unfortunately, we can't see a weekly report with this one. We have to look at this every day, every morning, and maybe the night before. And so anybody have any questions about anything? Does everything make sense? Because if you don't have any questions or comments, I'm assuming everything makes sense and you're ready to rock and roll. Feel free to unmute your mic, or you can chat in the our Zoom meeting chat room.
So, hey Carlos.
Yes.
Moving forward, what do you think? I mean, like the last 7 months been, such a crappy shoot. Do you think, are we gonna get better? The stock market, especially in the next couple of months before the holidays?
Yes. So the stock market has a couple cycles. It has a yearly cycle and it has a 10-year cycle. Now, the cycle, the yearly cycle is the main one that we need to focus on. And so I'm trying to find an article here. And I'll always post a lot of things just to warn you guys. Like, for example, the yearly cycle, basically we usually have about 6 months of bearish characteristics, and then the next 6 months we usually have bullish characteristics. Now, I knew in November 17th that we were approaching our bearish season, and so I had warned us, the next, the next holiday week, which will be very bearish. December is going to be very bearish. It'll actually kick in our bear season. And the first quarter is going to be very bearish, and we're going to see a correction soon. And I kind of post this to let people know what a correction looks like, and it could last weeks or months, and it could be a decline of at least 10% or more. However, I also like to let us know when the bull season is going to approach, but also to let us know more about these seasons, what they are, what they mean, and especially for you. Like, for example, the summer season, which is the beginning of our bull season, or the third quarter, which is around June 21st through September 22nd. So this is huge. Now, Elon Musk has set his Tesla reveal thing on I think the last day of September, September 31st or 30th or whatever. That's the whole artificial intelligence reveal. He's going to reveal the robot, and I think take reservations and so on. It's going to be very interesting. So the bullish season is going to ride that wave up until then, and to be determined. And but by looking at some of the description here, we can see that the bull season, like after several months of the market trying to recover, comes the summer. The strongest part of the bull market, this is when the media begins to recognize stocks as once again quality investments. Blue chips perform quite strongly during this period. New emerging industries tend to spring up during these periods, like maybe some IPOs or whatnot, and even rise to bubble levels, such as tech in most recent bull seasons. Investing during this time mostly requires going along for the ride. You can't just buy any stock and expect it to go up like you might have been able to previously, but you can feel confident that many stocks will continue to rise for the short and even medium term. So, and so this is, like I said, this is just a normal, algorithm and whatnot that, happens where, the fall season, which is the fourth quarter, is when we may see things kind of range, either flat or whatever, or it may continue to keep going up. Just depends on what kind of events are scheduled to happen.
Yeah.
And so, but we may see more information about maybe the housing industry declining or whatnot that just may provide mixed signals. We may have good news, bad news, but definitely the winter season is, which is kind of what we really kind of came out of, is the cold chill of the bear market. Periods such as these are often marked with high volatility and company bankruptcies, trade wars, elections, pandemics, and a lot more other, drama. Sometimes we'll see, financial panic and bank runs, and people often saying this is the end of the world. And of course, anyone paying attention would say that's ridiculous. The market won't be in a permanent bear market, no matter how bad things get. In same way that the world won't freeze over because of a bad winter storm. And so I like to remind you guys about these types of characteristics because it just makes sense. History repeats itself. Now, I'll try to. I'm going to find the 10-year cycle with the stock market, because, like I said, it's just very important to educate yourself on knowing what's going to happen before it happens, and these cycles are also very important to know because that way what's going to happen or what to do next. I got 3 of them that I'm posting here now. I may have posted I think the same one here. Hold on here. So I got that one. Okay, so for example, right here, this is the cyclical investing, whatever. But basically, this is it could be the 10-year cycle or whatever cycle.
Oh, wow.
It could be 5 years or whatever. But so the GDP growth, that's been a big subject lately, trying to determine inflation and this and that. Well, look at this. We have a high percentage, we got low percentages, and it's telling us, buy high multiple tech stocks, at this point. And then we have the slowdown. Fed begins to ease rates, which is kind of what we were experiencing, the third Federal Reserve easing and then whatnot. Now we're like up in here. We're increasing interest rates. I think we're right around the federal rate now, I think, is now 2.5%. And so that's saying buy paper and chemical stocks, sell medicine, and buy stocks that grow business like the CAT, which was the Caterpillar. We were just talking about Caterpillar without the earnings and whatnot. And then as it goes up, now sell financial, housing, retail, auto stocks. As we're starting to see the housing industry is going through a slowdown with the economic reports this week and last week, that now it's saying start selling it now because the interest rates are too high and people aren't going to finance things. They're not going to finance houses as much as they were. We're not going to see refinances. People are going to slow down buying vehicles, and so it's telling you to sell. And so we see this repetitive cycle that repeats itself over and over and over, about every 10 years, more or less. And so, but it's just very, very good information that I post regularly, and some of them is a little more user friendly than others. Like this one doesn't show as much like the whole rate stuff, but it kind of tells you kind of where we're at with the economic cycle and the stock market cycle. And then there's the other one right here that kind of shows more information with certain things and to buy and to sell. Like Walmart, Target, blah, 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 sell financial, housing stocks, things being really high. And we just saw Walmart miss their earnings. Was it last week or the week before? I was surprised. We were very surprised to see how well Amazon did because people are just buying more online and not really shopping at Walmart and stuff. But it's saying right here what to do and when to do it, because it just repeats itself over and over. And so now that you are aware of the yearly cycle and the overall 10-year cycle, you now will know what to do and what not to do.
Thank you.
Hopefully that makes sense. Anybody else have any questions or comments, anything you want to ask or anything you want to bring to the table?
One more thing that I really do appreciate it. I mean, I'm a new investor. My name is Pomi Ali, second year investing.
Good.
But this video, I mean, that shows me that what I've been doing wrong. What do I need to do before I buy any stock or any company? How to go in depth, to really understand the company before just looking at the numbers. Oh, this makes sense. Okay, let's buy this one. But this one shows that, hey, it's more than that. I mean, you have to do a lot more than just to look at the number. Okay, today it's going up. Don't buy it. Tomorrow it's going down. Let's buy it. So thank you. That really helped me. That I have to start doing other stuff too before I invest. I need to go do my homework.
Absolutely. Yeah. Homework, very important, but also knowing, the seasons, and especially if you're a long-term, short-term investor, this is even more critical than if you are a day trader, swing trader. As a day trader, swing trader, we just trade off the volatility. This kind of stuff is still good to know, that way you know what to expect, either more bullish or bearish characteristics, but it's definitely more valuable if you're a short-term and a long-term
No,
investor.
I'm
That way,
long term.
yeah, that way you can start buying now, or maybe weeks ago, when we know that it's the bull season. It started weeks ago, and then we know to sell right before the year's over, because we know things are going to start entering the bearish season, and then we can start buying in at the end of the bearish season and just kind of repeat that process. And I've helped a lot of people that have been in this, trading stocks for 5 years, 10 years, and they still didn't know a lot of this stuff. And they'll say, man, I've just learned just a ton of information. I've been doing this for 5, 10 years just from this little meeting or video. And so, but that's why we do this. That way we can learn from each other. I created this group about 3.5, almost 4 years ago. And I've just been able to learn so much from everyone, because usually for every pro trader or investor usually specializes in something different. And if you can learn from a variety of different people that specialize in something different, you're like merging all of that techniques and strategies and experience all into one. And now I can share that information with you guys, and you can decipher it the way that you want it, and to create your own strategies. And that way you can kind of move forward and gain from it. And so, but that's why we have these live chat rooms as well. That way we can trade together. We're a phenomenal team that I call kind of stock market ninjas, because everybody specializes in something, and we can bring something together to the table.
Uh, this is phenomenal. I mean, this is my first time attending this
Oh,
seminar
okay.
webinar, and
Nice.
this was an eye-opening experience for me.
Oh,
So thank
good.
you.
Good, excellent. And we'll do this again every Sunday, unless there's a holiday or something going on, then I might have to miss it. But yeah, normally we do this every Sunday morning, right at the same time, same place, same link and everything. Anybody else have any questions or comments before we finish? Otherwise, I'm assuming everything makes sense and you guys are ready to rock and roll. I'll give it a minute here. Yeah, feel free to unmute your mic if you want to voice chat, or you can chat in the chat room, the Zoom chat room, that way you can see it. All right, sounds like everything makes sense. That's good, because yeah, if it don't make dollars, it don't make sense. And so so I'm glad everything definitely makes sense. And again, the more you learn, the more you earn. I'm available 24/7. Anytime you guys have any questions or comments, feel free to message me, whether it be private message or in any of the chat rooms. I'm very active. And thank you guys for joining the meeting. Have a great weekend. Let's rock and roll this week, and stay safe, make good choices. We'll see you next time.
Thank you so much.